Good afternoon. You're watching Business World Live. I'm Jess De Los Santos. Let's take a look at how the local bourse closed today, Tuesday. The rally in the local index showing no signs of letting up just yet. The shares climbed for the second straight day here. The main index closed Tuesday up 0.8% to 6,867.88. But what's interesting here, and this one is coming from Bloomberg here, you have the local bourse, according to them, is poised to actually have its busiest year yet. That's as more than 69 billion shares have so far exchanged hands in 2021. That, in fact, saw a peak on January 18 with 169 billion shares. This is more and more retail investors shift to more risk placed with penny stocks in the hopes of better gains. As you can see right here, this part of the chart here, boxed here with in this green box here, it would show that peak reaching 169 billion shares back in January 18. You have Manny Cruz of Papa Securities telling Bloomberg, many retail investors bought small cap stocks not on fundamentals, but on mere speculation and expectation that there will be a faster rise. And the stock that has so far been the most heavily traded, Abra Mining. That's despite the stock not having any reported profit for over 2 decades now. That at least is according to data compiled by Bloomberg. It has yet to start commercial operations as of December 2019. Andrew Soriano of AP Securities also says that it's been rising on speculation that the shares shouldn't be trading below par value. There's also hope that a new investor will actually help develop Abra's gold mines. Now, on average this year, traded shares of Abra is greater than 54 billion daily, way higher than just 237 million back in 2020 or in the same period last year. Looking at how Abra fared today, it ended the day flat, but has so far managed to eke gains of 90% year to date. But looking at how the rest of the miners are doing, the counter caps off Tuesday with a 3.3% gain. Now, let's have a quick check of how the mining counter is at least fared on Tuesday here. You'd see most stocks here ended the day in the green, save for one. That's Apex Mining, which ended the day in the negative territory, down close to 3% here. The latest from the sector, the Mines and Geosciences Bureau, has allowed miners to realign some funding for vaccine procurement. That includes funds for social development and management programs, as well as safety and health programs. So funds from both of these programs would actually cover employees and non-employees as well who are residents of their host and neighboring community. Now, almost all miners joining the rally here across the index. You have Global Ferronickel leading the charge here, up 8.4%, followed by Nickel Asia, which is also impressively advancing here, up 5.7%. And lastly now, let's have a quick check on Metro Pacific. The investment holding firm, together with Singaporean partner Keppel Infrastructure Trust, have fully acquired the Philippine Tank Storage International Holdings. PTSI owns the largest storage facility of petroleum products in the Philippines. Metro Pacific says the facility is expected to expand this year to store approximately 6 million barrels. Metro Pacific edging higher, keeping in step with the rest of the bourse. Shares advancing 1.7% to 4 pesos and 15 centavos a share. Now, here are other headlines we're keeping our eyes on. Moody's Analytics has slashed its growth projection for the Philippines this year, citing lack of fiscal support and woes in vaccine acquisition. Moody's now expects Philippine GDP to grow between 4% and 5%, lower than its November 2020 forecast of 6.2%. This is also below the government's estimate of 6.5 to 7.5% growth. Moody's says the Philippines has not yet secured enough vaccines to cover the entire population and faces challenges such as logistical issues and growing doubt about vaccine efficiency. The government hopes to vaccinate about 50 million people this year and plans to buy up to 148 million doses. It targets to start inoculations this month. Moody's said that on the monetary side, additional rate cuts may not be on the table, but a reduction in the reserve requirement for banks would be an alternative way to provide additional stimulus. Now, the House Constitutional Amendments Committee approves the proposal to amend restrictive provisions in the Constitution. Resolution of both houses number 2, which pushes for economic charter change, cleared the House panel with 62 yes votes. 3 lawmakers voted no, while 3 other representatives abstained. The committee deleted the proposed provision which would allow Congress to tinker with the restriction on land ownership. But the panel still approved the proposal to insert the phrase unless otherwise provided by law in such provisions concerning Filipino ownership. This means lawmakers would be able to use ordinary legislation to lift the current prohibitions on foreign investors. The RBH2 will now go to the plenary where all House members may debate on the measure further and may introduce other amendments to it. Now, the Tariff Commission will hold a public hearing on Thursday over the Agriculture Department's proposal to slash tariffs on pork and rice imports. This in a bid to tame the high prices of commodities in the country and ensure food security amid the pandemic. Some sectors, however, are against this move, noting its impact on farmers who are still reeling from the fall in farm gate prices due to high imports under the rice tariffication law. The Federation of Free Farmers said cutting tariffs could lower palay prices by at least 2 pesos. Meanwhile, the Agriculture Department says that the implementation of price caps on pork and chicken meat will start on February 8. President Duterte signed yesterday the executive order setting a 60-day price ceiling on these products as proposed by the DA. Now, to get more clarity on this price and supply issue of pork, meat, and other food items, we have on the show Agriculture Assistant Secretary Noel Reyes. Good afternoon, Asik Reyes.
Good afternoon, and good afternoon to all.
All right, sir, first and foremost, a clarification here. So Feb 8 is going to be the start of the price ceiling. Is it a postponement or a grace period, or was it meant to really start on February 8 from the get-go? And just in case it is a grace period, why the adjustment?
The law takes effect as per EO upon publication in the official gazette or publication in the national newspaper. So while awaiting that requirement, we are making arrangements with departments of trade and industry and interior local government, the ALG, MMDA, and Metro Manila cities and council municipalities to discuss how to go about this price ceiling, how to implement it. We'll be publishing the EO, in several newspapers and have it aired over radio and TV, and then we'll be printing tarps to inform the public, the retailers, on the schedule, on the price schedule, which is say 270 for Kasim and Hige, 300 pesos per kilo for Liempo, and 160 pesos for dressed chicken. So we can say that's a grace period. So the retailers asked us to have to give them that reprieve because they bought their inventory from previous prices, so they'll have to recover their costs. So again, the secretary said while awaiting the publication, we'll do with say a grace period of 1 week till February 8th.
Okay, so a 1 week grace period, at least that part is clear. But at the same time, Asik Reyes, you now have a number of players here from the side of the traders, even the dealers and some of the retailers here, threatening or at least planning to halt operations following the price cap. Will this not lead to further shortage in pork supply, especially in Metro Manila?
No. Currently, we don't have enough supply here in Luzon, but we're encouraging hog raisers, and we're providing transportation support for them to ship their hogs, live hogs, and pork in a box to Metro Manila, and we're granting, say, about 30 pesos per kilo And as for the landed cost, that will bring down their retail to about 270 to 300. So that's what we're looking at.
But should some of these players actually halt their operations, what's plan B here for the agriculture department?
The plan B is, again, the medium term is to repopulate, give them incentives. Say, we're granting the Land Bank of the Philippines to be opening a window worth 15 billion for commercial racers,
Mhm.
2% interest, and for us, DA Agricultural Credit and Policy Council will be setting aside half a billion pesos for backyard and semi-commercial races for them to borrow money, so then they can repopulate and in ASEP-free green or free areas in Luzon and of course in Visayas and Mindanao.
Now, Ashek, let's move on over to this news bit here on the lowering of tariff rates here, especially for rice and meat imports. For rice first, why include the produce? Is there impending shortage to begin with when it comes to rice? When prices, in fact, if we try to take a look at the numbers, they have been, if I'm not mistaken, also in a downtrend here. So why include rice?
No, we're looking at the possibility of exploring other markets for rice. We're not saying because our regular suppliers now are Vietnam and Thailand, and we're looking at other sources, say India, is offering lower prices for their rice. So again, we're just opening up, exploring other markets, no, for our rice importers.
But at the same time, you still have a number of farmers here reeling from the effect of the rice tariffication law. Wouldn't this be a further impediment for our farmers?
No, actually, we're prices are going up. Palay prices are going up, and they're steading up, climbing up to about 19 pesos per kilo. That's the buying price of NFA, and the on the retail price of rice, it's improving. So again, we're doing good in the rice sector.
Mhm. Now, as for pork, lowering taxes stream revenues, which can then be used to actually fund hog repopulation, especially since the sector has been heavily battered by the African swine fever.
Yeah, that's a good suggestion. No? That has to be made into law, just like the rice tariffication law, or whatever tariff we get from imports of livestock and poultry products. Then, as of now, we're putting it into the ASEP fund for the agriculture sector, but not specifically for the livestock. So again, there should be a law, and Congressman in Berga and Congressman Chanco earlier this morning said they'll draft a law saying that the tariffs collected from imports of livestock and poultry will be put into just like the RTL, or rice tariffication law.
Which exactly drives the point here, Asif Reyes. If we're going to reallocate at least some of the funding that will be gained from taxes on pork imports, won't lowering the tariff actually somehow cut as well some potential revenue, which can then be used to actually repopulate the hog industry?
Different. We're proposing to lower the tariff for this year only, so that will give us a reprieve on the high pork prices. Okay,
Mhm.
it's not a long-term deal. So then it will only be applicable to this year, if
Okay.
ever approved by the Tariff Commission.
Okay, so given that, how much supply is the country planning to import, and what safeguards will be put in place to actually protect local producers?
The volume depends on the consultation to be conducted by the Tariff Commission. But currently, we have 54,000 metric tons for under MAV with 30% tariff, and out quota or beyond 54,000, they are levied 40% tariff. So depends on the Tariff Commission consultation process this coming Thursday.
Okay, so lots of things hanging on that hearing, at least to be conducted by the Tariff Commission tomorrow. Thank you so much for your time this afternoon, Agriculture Assistant Secretary Noel Reyes.
Thank you too, Alex.
And those are the biggest news this trading day, February 2, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News.